Yeah, that's exactly right, Matt. And this is going to be a really important factor to look at as we come into today's OPEC meeting. Clearly, the Aramco IPO and the timing of today's pricing means that this could potentially impact the outcome of the meeting. On the one hand, these oil ministers would perhaps likely need to see higher oil prices in order for the Aramco IPO to be a success. But then there's another camp who says that oil prices in their current range are just fine. Now, I asked the Iraqi oil minister in this exclusive CNBC interview yesterday whether or not members of the group have been pressured by Saudi Arabia to not just improve their compliance, remember Iraq being one of the most laggard members of the entire group, but also to perhaps deepen production cuts to firm up prices ahead of this highly anticipated IPO. Here's how he responded.
We have very close relationship now between Iraq and Saudi Arabia. The present government, we visited Riyadh and we expanded the cooperation between the two countries. I am in continuous, contact. He contacts me, I contact him on phone. We had conference call and so on. But I don't accept that OPEC is under anybody. OPEC is a collective, organization. Anyone, even the smallest producer, member, okay, if that country does not accept a resolution, there will be no resolution. So let us have the record right. I respect His Highness, the new Minister of Energy in Saudi Arabia, and we are friends. And I know he also shares the same attitude, and we would like to cooperate. We keep OPEC solid, and I haven't noticed any change. Policy-wise, when it comes to OPEC, strategies, OPEC and so on, cuts and shares and so on, I haven't noticed any change between the two ministers.
How will the Saudi Aramco IPO influence the decision-making process at this upcoming OPEC meeting? And has there been any pressure from the Saudis to perhaps do more in order to ensure that the float of that company is a success?
I cannot really link it to OPEC at all. I think it's an internal issue. And they have been, working on this for several years. You remember 5% and then 1% and delayed and postponement and so on. I wish them success, okay? And of course,
it's been a long time coming.
This is part of the Royal Highness, the deputy to the king. Policy of opening the economy and so on. So I think it's an internal matter. I don't see it as let us say any factor or significant factor influencing their membership and their role and their attitude and so on within OPEC at all.
Iraq's oil minister speaking exclusively to CNBC here in Vienna. Now, Matt, later today we're likely to get more details on the Aramco IPO pricing. The company has already released a share price range that values the company, as you know, at $1.7 trillion US. This is going to be the world's largest IPO. That range at 30 to 32 Saudi riyals a piece, or about $8 US a share. Sources say that the IPO is likely to be priced at the top end of the range. That means it would be closer to that 32 riyal a piece range, or share price, I should say. So this is going to be interesting to watch. It certainly means that the Saudi Arabian government is on track for a record-breaking payday when Aramco goes live. In terms of how much it could actually raise here, at the top end, it would be about $25.6 billion, which would beat Alibaba's record-breaking IPO of $25 billion back in 2014. However, at the bottom end of the range, it would fall short. So by pricing it at the top, clearly this puts a little bit more pressure on the company to ensure that this float is a success. Also, just wanted to quickly point out what's happening with the dividend here. This is very important for investors. Aramco is already promising about $75 billion in payouts to investors next year, but this valuation would imply that Aramco would have a dividend yield of around 4.7%. or down to 4.4%, which would mean that that would be smaller than its rivals like Exxon and Shell, which both yield at around 5 and 6%. So that is what we're looking out for today. All eyes on that pricing figure, Matt. Back over to you.